Hello, investors. At Sharply, we are continuously building industrial grade tools that are designed to help the retail investors. And in this video, we are going to talk about one such tool, and that is stock style boxes. But before jumping into stock style boxes, we have to analyze one more thing, and this is one of the most useful features of Sharply, and that is stock scores. Now, in quantitative investing, it is proven that investors should look at three key factors before buying a stock, and they are quality, value, and momentum. Now, at Sharply, we provide three stock scores based on these three factors for each of the stocks that are having market cap of at least 100 crore. Because below 100 crore market cap, there is not much data available about the company, as well as the data can be manipulated as well. So to look at these stock scores, you just simply need to search any of the stock and then go to the analysis section. So here I'll type, let's say ICICI Bank, and as you can see, you in the analysis section, once you scroll down in the style analysis, you will find this stock scores. Now, in Sharply, these are the single factor scores: value score, momentum score, and quality score. We also have multi-factor scores as well. So we combine both momentum and value. Then it is MV or VM score, then MQ score. And here, combining all three factors, we provide this multi-factor QVM score. Now, the scores are designed in such a way that the higher the score, the better the factor for that stock. So higher value score, as highlighted here, indicates that the stock is available at a comfortable valuation. Lower momentum score indicates that stock is showing low momentum as of now. And higher quality score is showing that this company is of high quality. Now, how do we define that? To define these scores, we use multiple metrics relevant to each factor. So to define the value score, here you can see that we take a look at earnings yield, price to sales, book to market, free cash flow to equity yield, and 3-year average earnings yield. So based on this, analyzing this multiple factors, we define a methodology, and in that we define this metric value in a percentile system, and the final value is shown here. So for momentum, as you can see, not on the historical data, for momentum, we have two parts in the momentum score, that is price momentum and earnings momentum. Now, for price momentum, we say 1 year return, 6 month return difference from 52-week high. And for earnings momentum, we also analyze that how the pace of earnings is changing. So if the company is growing, earning at a rapid pace, then it is a very positive sign, right? So in momentum score, we combine both price and earning momentum. The third one is quality score, and in quality score, we have three subsections, that is profitability, growth, and safety. For profitability, we look at the efficiency and margins. For growth, we look at growing profitability. So how EPS is growing. And for the safety, we look at balance sheet and different ratios like liquidity ratios and many more. Right. So based on that, again, we derive at a percentile value, and based on that, the final value is shown here. So one thing that I need to clarify here is that this is not to replace your analysis. So if value score is high, that doesn't you shouldn't blindly follow this and say that okay, the valuation is very comfortable. These scores are designed to help you in your research. They are not there to replace your research, right? So for every stock, you will find the stock scores in the analysis section. And in quantitative investing, it is also proven that if the stock is having high scores in at least two of the three factors, then the stock may perform well in the future. So based on these three scores, quality, value, and momentum, we differentiate and we sort the stocks in different bucket. We put them in different buckets. And these buckets are called stock style boxes. Now, some of the style boxes are favorable. So if the stock scores are at least two of the three scores are higher, then it will be put in a positive style box. If that is not the case, then it will be in the negative style box. And to open this style boxes, simply go to this analysis tool, then stocks and stock style boxes. So click on there and you will be able to see the stock style box here. Right now, as we can see here, there are total of 10 style boxes. So in super stocks, there are these are the list of stocks that are having high score on all three factors. So selected. So as you can see, for Coal India, Indian Oil Corporation, Indus Towers, all the scores are high, value, momentum, and quality. This means that the stock is available at a comfortable valuation. The quality is also good and the momentum is also strong. So these are the stocks that are firing on all the cylinders. Then the second positive style box is under the radar style box. In this, the quality and value scores are high, but the momentum scores are low. So these are the high quality companies available at a comfortable valuation, but the momentum is missing. So this can be a type of buy where you set a price alert on charts that if a certain price is crossed and then if the momentum is coming in, you can buy this. The third positive style box is market angel. In this, the momentum and quality score is high, but value score is not high. That means this are the stocks that are showing very strong momentum and are also of good quality, but valuations are not favorable. So, to enter at this level, it won't be the good decision to go for these stocks at this level, but they may continue to show strong momentum. For example, Hindustan Aeronautics is showing a very strong momentum as of now after their quarterly results, and but the valuations are not very favorable. So if you are entering, then enter with a tight stop loss. The fourth positive style box is potential turnaround. And in potential turnaround, the value score and momentum score is high, but the quality score is not high. That means that the stock is cheap, it is showing strong momentum, but business quality is not high at the moment. So in this, you may find some turnaround stories, or you may also be able to see some stocks that are going through the headwinds. So some of the IT, some of the chemical names may be here that the margins are compressed as of now, so quality is not good. So this potential turnaround candidates are the candidates with comfortable momentum and comfortable valuation. And now let's look at the negative style boxes. The first one is value trap. In this, only value score is high. Momentum and quality scores are low. This simply means that the stock is available at a comfortable valuation, but it is neither showing momentum, it is nor having good quality. So these stocks may not go up. So these are the value traps. As you can see, Make Money Organics or Cosmo First. There are many names in this, right? The second non-favorable or unfavorable style box is momentum trap. Here, only momentum score is high. So you may find many of the junk stocks here, right? So some of these stocks may be having a turnaround. So that's why the momentum is strong as of now. But as per our stock scores, the valuation and the quality is not favorable. These are just showing strong momentum. So that's why they are called momentum trap. The third one, third negative style box. This style box is called out of favor. So in out of favor, value score and momentum score is low, only quality score is high. So these stocks are of very high quality, but their valuation are not comfortable and they are showing weak momentum. For the stocks like Hindustan Unilever or Asian Paints, right now these stocks they are very high quality businesses, but that doesn't mean that you should pay any price to buy them, right? So valuation and momentum are not favorable. The another negative style box is fallen angels. In this, value score is mediocre, quality score is very high, and momentum is very weak. So this style box have stocks like Reliance Tech, Reliance Industries, Tata Consultancy Services, Infosys, ITC, etc. So valuation is not very bad, but it is not great as well. And the momentum is very weak at the moment. And the last negative style box is don't touch. Now, these are the stocks performing low on all three factor scores. So as you can see, ICICI Prudential Life, JSW Infra, Delivery, Lotus Labs, right? So these are the names that are not having comfortable valuation, not showing strong momentum, and the business quality is also not good. So these are, we call them don't touch, that you should avoid these stocks. And in neutral style box, if the stock is not falling in any of these categories, then it is considered neutral. So there are many names in the neutral as of now. For example, HDFC Bank, where valuation is great, quality is okay, but very weak momentum. So it is neutral. Right, Bharti Airtel is in neutral, Maruti Suzuki is in neutral because the value and momentum both are okay, it's not very great, not very bad, and quality is of very high. So the last style box is neutral. Now we believe that you should look at the stocks in the favorable style box neutral. So the first five style box we believe that investors should focus on before buying their stocks. Now these tile boxes are also not like act like a crystal ball. Okay, so you may find some good opportunity in momentum trap as well. So if the stock is showing very strong momentum all of a sudden, and if you dig deep, you may find some turnaround situations. Right. So we are not telling you to just completely avoid these stocks, but in the favorable style boxes along with neutral, you will find very good ideas. So that's it. We hope that using this stock scores and style boxes, you will be able to analyze stock in greater detail and find the right investment ideas for your portfolio. Thank you.